Good evening, traders. It's Buyer from London. It's Sunday, the 17th of July, and the currency pair I'll be looking at for this week is the gold dollar on the daily chart. For the past 2 weeks, basically this pair have made a 10-day rally, so it's been rallying for the past 2 weeks, as you can see from this price leg here. However, as the price action takes out this low, the previous high, RSI didn't. So we've got a clear divergence of price action here. Price making a new high while RSI diverged from the new high. So the implications of this, from my interpretation, is price should fall in the near term, in the very near future. And obviously this fall could be a reversal or could just be a minor retracement. Actually, my plan is to trade this retracement or reversal. In terms of entry levels, so my bias is to the downside and I'm looking to go short. In terms of entry levels, I'll be using I've identified an harmonic pattern called the butterfly pattern that has been forming on this currency pair since May 02. So the pattern is a 5-point structure. Just quickly write that out. You got point X up there. You got point A here, so that's X, A, B, C right there, and the high there is point D should end within a strong resistance zone, which is formed by different Fibonacci price levels of price legs within the structure. So you've got a 5-point structure X, A, B, C, D. So my plan is to place an entry order to go short within this resistance zone, and so yeah, that's the plan. So basically the price levels of the resistance zone is literally 5 different levels from the Fibonacci retracement, Fibonacci studies of the price leg within the structure. So for example, you've got a price level there which is a 127% of the XA leg, that's 1607. You've got at the upper boundary of this price level, which is the 161.8 Fibonacci extension of the BC leg, that actually coincides with the 127% extension of the XA leg. As you can see that you go through price level right on top of each other, so that gives a little bit of confidence in this setup. And the lower boundary of the resistance zone is the 127% of the AB leg right there, projected from the C point. So literally you've got your potential reversal zone where you have a strong resistance between 1599, or basically between 1600 and 1507. So we've got a resistance zone of less than 10 pip range, so that's a very tight zone. So the high there is RSI is telling us price should fall in the future, and this pattern is basically saying price should rally to that point and fall and encounter a resistance zone. So that being said, I wouldn't go short right now. I'll place my entry order at 1595, just below that psychological barrier of 1600, and another entry order at 1607, which is this level here. So that's 2 entry orders at 1595 and 1607. Now in terms of stop loss, basically if you have maybe 2 daily candle close above this level, then this pattern will be invalidated. So in terms of stop loss, what I want to do is look at the recent price action, and I've got the widest daily range, which is this candle here. This candle here is the widest daily range for the past 2 weeks, and that range is literally 33 pips. So I want to place my stop loss 33 pips above this resistance zone. So 33 plus 1607 is 1640, right? So I'll be playing my stop loss at 1645 just for a bit more room. So that will be where my stop loss will be. And in terms of target, I'll be using Fibonacci retracement of the point A of the AD leg to manage the trade. So if I just do 38.2, 61.8, and 88.6 retracement of the AD leg. Right, so what we have here, obviously if price goes to this zone before reversing, then my point D will be up there somewhere. So I'm going to extend this Fibonacci line to the upper boundary of the resistance zone identified by this butterfly pattern. Right, so that being said, so you've got your two entry orders, stop loss 1645. Now in terms of target, you can see the 38.2 retracement of that AD leg literally coincide with the points being the pattern, so that could provide a significant support for price action. So I'll be looking for price to close below this level, which is 1551. Then I want to move my stop to break even, both on the two orders. Then when price reaches the 61.3 retracement of the AD leg, which is the 1517.40, I'll take partial profit. But ultimately, I'm looking for price to close below the 88.6 retracement of the AD leg, which will be at 1478. Now, if price close below that level, then from my interpretation, the reversal is in full swing. It might not just be a minor retracement, and I'll be basically looking to trail my stop and manage my trade accordingly. We've got another support zone at 1445, another one at 1425. So once price close below this, I know price is going down much further, so I just want to basically trail my stop and wait till I get stopped out. So in summary, you got RSI divergence, which means prices falling in the near future. Butterfly pattern identify basically a 7 pip resistance zone. So I'm gonna place my entry order at 1595 and 1607. Stop loss as 1645, which is identified by the widest daily range for the past 2 weeks from this candle here, I believe. Yeah, from this candle. So stop loss at 1645, and once price goes to close below this point, trail stop to break even. When price close below the 88.6 retracement, which is 1478, then price should go much further downward. Right, so that's all I want to talk about today. Good luck trading for the next week.